Hello everyone, welcome back to my YouTube channel. On this channel we talk about personal finances and everyday life with the context of Uganda. And if this is content that you're interested in, please like and subscribe so that whenever we release new videos, you're notified and you don't miss out on any of the episodes. Alright, so back to today's video. Today I'd like to talk about utilizing insurance as one of the strategies on your financial journey. Yeah, you had me right, insurance. So I recently signed up to be an agent with Prudential Life Assurance, and one of the prerequisites to be signed on as an agent was a training. So I've been undergoing some of the trainings that they have for the different products that they have, but also the skill set that's required to be able to sell some of these products. And I thought how best to utilize the knowledge that I've acquired so far, but by sharing it here on the platform. So some of the products, I think over time, of course, I'll have to take you through the different products that they have. But for today, in line with our topic, I'll share one of their products. So it's called the Pro EduSave policy. And how this policy works is you determine a premium that's comfortable for you to pay, and this is paid on a regular basis. This could be monthly, quarterly, biannually, or annually, or even it could be a lump sum that's paid in one go. And this is for a definite period of time. It could be 5 years, 6 years, 7 years, 10, 20, name it. So how it works is, upon signing up, you say, you sign up the contract, the insurance policy, and you say, I'm going to take up this policy for the next 5 years. So for all the next 5 years, you're going to keep paying a certain premium that you've agreed, let's say 100,000, 200,000, 500, a million, there's no cap to that amount. And you know that once this period of time expires, you'll be given your money back in a lump sum. Of course, if any of the things that you've signed up to happen, then you'll be given your sum assured ahead of time. And then at the expiration of the contract, you'll then be given the agreed amount that was that you set out from the beginning. Why do I think this method of utilizing this as a savings method works? I know that all the other places, one of the things that stops us from saving is not the fact that we don't know why we should save, but rather it is that willpower, or that after we've saved up for a while, something comes up and then we draw down on all our savings. So what the thing that the policy does for you is that it locks in this money, and you know that you don't have access to it for the next 5 years. Let's use 5 as the example. And you know that no matter what, you have to pay those premiums. Otherwise, you may lose out on your monies that are previously paid. So I feel like then, because of that, and they have a way that they make it an automated deduction, so that if you agree that I'm going to be putting 300,000 every month, you give an instruction to your bank, either through direct debit or standing order, that every second of every month, this money should be transferred to the Prudential account. And there, you don't even have to think about it. It becomes automated saving. And then upon the duration expiring, you have this lump sum in one go. And of course, with that lump sum, then you can opt for all the other places where you can invest it and grow it. And I think then you can press repeat. Why not? Tell me what you think about it. I know that, the few people that I've talked to, of course, they've had some questions and reservations. What are yours? Let's discuss this, and I would like to hear, what are your opinions? What are your experiences with insurance? Please reach out in case you need further information. Of course, I'll be talking about the different other products that they have, because they are in plenty. But for today, I felt like this is one that we could easily talk about. And I think maybe to clarify, while this policy, that the features that I've talked about is termed as Pro EduSave, it could be used by any person, depending on your goal. So if I don't have a child and I'm not trying to save up for education, it could be that I'm saving up for land, or I'm saving up to buy a car, or I'm saving up to study a master's. So the goal shouldn't, the name of the product shouldn't stop you from utilizing the product, as long as the benefits meet the kinds of things that you're trying to achieve. So I hope you have you've learned a thing or two from this episode, and I look forward to hearing from you. Please ask me those questions in the comments. I look forward to interacting with you and being able to advise further and on the different other products that are out there in the market. All right. Happy saving, everybody. Bye bye.